Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right. The whole gang's here. Awesome. Happy Wednesday, everybody. We're cruising into the end of August. Good riddance. Good riddance to the low volume summer doldrums, which are most intense the last 2 weeks of this month. And then also we want to keep an eye on the last 3 trading days of this month, which would be today, tomorrow, and Friday. And then we go into a 3-day weekend, and I practically forgot about that. So we have this 3-day weekend coming up, and there usually tends to be a little bit more selling going into a long weekend, mainly because, remember, the markets are going to be open on Monday, just not in the US. And then there's the concern about all the things that could happen over the weekend. And you'll notice that traders, investors tend to take a more cautious approach to a long weekend. Add to that the already lower volume. Oop, I think I'm just putting my, I make a morning lemon drink. You can't all see it because not everyone's on camera. Tell you what, it's a nice way to start the morning. I haven't been doing coffee. So I have not been doing coffee, believe it or not, until afternoon. So this is see, they're total transparency. This has been uncaffeinated Raghee every morning. All right. So the last 2 weeks of August are the lowest volume, historically lowest volume weeks of the year. The last 3 days of every month tend to be where the bulk of the monthly redemptions come in. So there's a little bit of tendency, right? I'm not saying this is a prediction. I'm not saying this always has to happen, but there's a tendency for a little bit more weakness. And if you think about it, if you're going to take redemptions from your long-term investments, your long-term holdings, it's definitely something that people tend to do at the end of the month. And then if they're going to reinvest, it's usually the first 3 days of the new month. So it's just a rhythm that we want to be aware of. Specific to where we are today, we always want to know. So think about it. What do? We kind of zoom out to the tendency of the month and the tendency of the couple weeks, and then the tendency to where we are in the calendar. If this were heading towards the third Friday of the month OPEX, we'd again kind of look out the big picture, hone in on whether it be Pitbull lows, whether it be the OPEX Friday. Again, we want to know where we are specific to the month, because every month has a rhythm, and every month within the year has a rhythm too. And then we dial down to the day. So today we had no hot zones before the bell, no 8:30, no 9:15 data. We have crude oil inventories at 10:30, and just before 10:30, just before break, and I'll keep an eye on the clock, I'll walk you all through the hot zone setup. And this is not specific to crude oil, but it's a day trade setup you can use in front of any high impact event. Any high impact event is going to be, of course, more volatile and potentially higher risk, but there are some ways to mitigate that risk and find zones going into any hot zone. So while I'll show it to you all with 10:30 crude oil inventories, you can do this with GDP on Thursday. You can do this with PCE on Friday. You can do this in front of initial claims, anything. But remember, it is a hot zone. So we're expecting higher amounts of volatility. I'll show you how we manage that. Tentatively, I still don't see a time for it, but supposedly Barkin will be speaking at some point. Don't know when. It's just tentative. And just a reminder, any of these events are usually speeches, and Barkin is the Reserve Bank of Richmond, Thomas Barkin. He's the president, and he'll be speaking on some title about commerce. Don't know when that's going to be. I don't expect that to be a major market mover, but anytime an FOMC member opens their mouth, it's a thing. And speaking of that, FOMC member Williams spoke this morning on CNBC. So this is where having a calendar is really important. And I don't at all recommend using television, but if you want to use it in a news capacity, as soon as I see an FOMC member on the television, or the dumb box, as my mom calls it, I'll pay attention, because that could be especially a current Fed member, right? Not one who's been invited as a guest who was a previous Fed member. And no surprise, they're circling the wagons. They're emphasizing Fed independence. They're defending, whatever Fed member might be under pressure. And I expect that, right? That's their gang, and they're going to protect their gang. I get it, right? But for the most part, the more interesting data-related things that Williams said were things around rates. So Williams emphasized that every meeting is live. Well, we've heard that for a while. That means they really haven't made up their mind until the day of. Okay, fair enough. That's not new news. He emphasized wage inflation as an important metric to the jobs market, and that the job market growth is slow. We still can see the data for the Fed Fund futures, which are taking all these different events and all these different data points. If you're a Fed Fund futures trader, you're looking at all the things that could impact that market, just like a gold trader will look at things that are impacting that market, or just like a S&P trader will look at the things that are impacting that market. There are still high 88.2% expectation for a rate cut in September. Gang, that's fully discounted. And I can tell you right now, the FOMC darn well knows that. So unless they are making a clear and concerted effort to talk that down, they're going to cut on the 17th. And I've seen no evidence that Powell from Jackson Hole, or even this morning Williams on CNBC, took the time to talk those expectations down. He just played coy. It's a live meeting. All right, so we talked about the timing, end of month redemptions, a long weekend. The only other thing to remember is NVIDIA earnings are after the bell today. So NVIDIA is interesting because we have a bulk of tech earnings far earlier in the earnings season every quarter. And NVIDIA is this weird one that comes way later, way after Apple and Microsoft and Amazon and Tesla. And they're today after the bell. Now, NVIDIA is not just your normal vanilla stock. It doesn't matter whether we're in semis or not. XLK is weighted with NVIDIA. SMH is weighted with NVIDIA. That's technology and semiconductors. The QQQ, therefore, is very much going to be moved by NVIDIA, and so too will the S&P. The Dow less so, but still the Dow is not immune to tech earnings, because the second most heaviest weighted sector in the Dow is technology. So nothing really, but maybe the Russell or financials or things like that are really immune to this event. And if there's general risk off, in other words, NVIDIA earnings miss and NVIDIA heads lower, that could create far more impact beyond just NVIDIA. We know this. This is why we track high concentration weighted names, and NVIDIA clearly is one of them. So getting into the pre-market, there was an unusual sell-off even before Williams was on television, unless it was scheduled and people sold off in front of him going live he was on CNBC, by the way. All four indices sold off during the 825 5-minute candle, and they headed right towards the overnight low. And that's a level that we can presume is support based on the previous non-9:30 to 4 o'clock trading hours. So overnight high, overnight low, overnight open. And then we also look at the previous session close. So interesting that we moved down that way. This is what NVIDIA has been doing this morning. And you can see NVIDIA started selling off at 825. So clearly there's some impact there. Gold is actually in an uptrend. You'll see that in the notes there. So I might be interested in a long setup in gold. Despite the weakness in the broader averages, which are below the previous session close, none of them are in downtrends except for the Russell. So here at 929, RTY is in a downtrend. So I'll focus on the trends first. That's the best directional clarity that we have. And then just kind of remind everybody, everything we do, whether it's day trading for the next hour, or whether it's swing trading, which we'll do the hour after that, or even our long-term account growth, it's still process, alignment, directional bias. What's process? Well, in a lot of ways, process is the combination of watch list building, what we're going to trade, and then strategy, how we're going to trade it. So what we're going to trade and how we're going to scan it, that process part, leads into alignment. And at the end of the day, once I look at the sectors that are weighted within each index, and then I can single in on the stocks that are relative performers within that sector, right? So it's a very easy flow. Then I'm going to remember that the sector is ideally moving with the index and the stock is ideally moving with the sector. That's alignment. That's where we get that better follow through. And I kind of put some groupings here for those of you that are still kind of getting the hang of what sector belongs to which index, right? And then once you know the sector, you can head on over to ETFDB, take a look at the top 5 to 10 stocks and know, oh, if we're looking at XLF, that's Berkshire, JP Morgan, Bank of America, Visa, Wells, Morgan, Citi, things like that. So it's a pretty easy flow if you focus on that type of alignment that's geared towards understanding and following the indices, right? I'm not looking at a niche. I'm not looking at a one-off stock. I'm not looking for a clean shirt in the dirty laundry, right? Okay, so, I just sometimes remember this great, who's seen, I think it's Bull Durham. Who's seen Bull Durham? It's been a very long time since I've seen it. It's not a particular favorite movie of mine, but there's a great line in it. And I kept this image, and I know I have it somewhere. But there's this great line in the movie where Kevin Costner's character says that, and I will find it later on, but basically says that baseball is a really simple game. For those of you that don't know the movie, don't worry. It's about baseball. Kevin Costner's done a lot of baseball movies, hasn't he? And they're all really pretty good. Here it is. He says baseball's a simple game. And I don't know how many of you are baseball fans out there. A good friend of mine used to say, this is a very simple game. You throw the ball, you catch the ball, you hit the ball. Sometimes you win, sometimes you lose, sometimes it rains. That's trading, gang. That's trading, right? And for us, sometimes I can find what to trade. There's some clarity. And sometimes there's clarity about which direction to trade it. That's a trend or bullish chop versus bearish chop. Sometimes I can find that price has reached down to that level where I can get in. And sometimes price actually follows through to the level that I can get out. And anything beyond that is really just going back to process. And if you don't have a process, then, well, of course, you're going to be subjected to the noise. So keep in mind, we can simplify this stuff. Yeah. All right. So the bell is rung. And from 9:30 to 9:35, really important task. You ready? This is what we do from 9:30 to 9:35 at least, right? Sit. Nothing. We can track some of the pre-market tendencies. We can narrow down maybe some of the things we're going to trade. Gold is still something I'd like to maybe see if it can hold on to its uptrend. It's doing it's putting on a valiant effort. I'd like to see if maybe the Russell hangs on to its downtrend. So the Russell can move differently than the other 3 indices because it's weighted nothing like the other 3 indices. So that's not surprising either, right? So if the Russell's shooting straight up, we're probably going to shake off that downtrend. Clearly, I'm not going to short into something like that. Although, not a setup, but take a look at this resistance level for the previous Darvis. If you're looking at whether this is making significant new highs, look at where the highs were. So Russell is off to the races. And I'll tell you this, sometimes the Russell is moving because it's predominantly banks, in this case, regional banks. Sometimes we'll see financials, and that moves the Dow because that's the number one sector in the Dow. Sometimes the Dow, the large caps, and the Russell, the small caps, tend to move similarly, not identically, but similarly, because they're both going to key off banking. Is Russell heading higher because of KRE? It could be. Is the Dow heading higher because of banks? Maybe, right? So sometimes you'll notice that sympathetic movement between the Russell and the Dow because of the KRE regional banks and XLF big banks. All right, so we're almost done sitting and waiting for that candle of unusual size, COUS, because right when the bell rings, lots of volume, lots of interest, lots of activity, big 5-minute candle, candle of unusual size. A candle larger than, basically, if you look back at the last 5 candles, what was their typical range? And is this exceeding that by 1.5 to 2 times? Oftentimes we'll see a candle of unusual size on the open. All right, so it's 9:35 now. Not that I'm going to get to work right away, but at least I know volumes come in. The bulk of that reaction in the first 5 minutes is now done. And now we can see if whatever that momentum was is going to persist. So in the Russell, it's clearly persisting. This is why entering a trade right at the bell is usually a very bad idea. Because if I was bearish and I shorted down here, that is what we call a face ripper. Yes. And if I'm looking at whether or not the Russell is still in the bullish or bearish hemisphere, it's tackling right now the previous session close, yesterday's 4 p.m. close. So that would be a level potentially of resistance. But do I have a setup? Well, let's go back to what our setups are. We're looking at really 3 things. All right. So we've automated these things so I don't have to draw things and really know or memorize. If you're a brand new trader thinking, Rog, I don't even know what I don't know yet. I certainly don't know how to recognize levels without having spent some time looking to see if they've met the criteria. I agree. And that's always the pain point for oftentimes new traders or traders new to a process. So we automate everything, right? And I'm going to automate the volatility with an hourly price movement range. I'm going to automate support and resistance with the Darvis. And I'm going to automate mean reversions in the context of a trend with the wave. So those then become our 3 setups. Really simple. Now we just wait. We wait some more. We wait to see if a Darvis is formed. We wait to see if price is near the automated volatility of the hourly price movement range. And we wait to see if there's a trend anywhere, which we've lost all of them, gold and the Russell, right? And I'll see, okay, now that first 5 minutes has gone by, the things that were looking so clear pre-market, which really should be viewed as a thing unto itself, right? It's its own session, it's its own psychology, etc. So when I look at gold now, which was a pre-market uptrend, right? What's happened? And remember, I'm using the top tier tools. Tops is great, no doubt, but I'm using the top tier tools. And you'll notice on my screen that the trend that once was is wobbled right out. Now, it doesn't mean that we may not be able to buy, but it's not going to be based on the wave any longer. It's going to be, are we near an hourly price movement range or a Darvis? Yeah. So I'm not bearish gold. I just would be very concerned about this level holding. Now, since we have not wobbled out of it completely, since that would need 2 gray segments or 2 5-minute candles to say, yeah, that trend is no longer valid. It's bullish chop, right? It's bullish chop. So the best thing I can do between now and 9:40, and really the only thing I could do, is take a look at gold. I know this is going to be a little bit more aggressive in terms of the fact that the ideal scenario for gold to hold is not there, but I can look at the August 29, 310 or 311. Yeah, 310 or 311. So 29 August. If you like to be at the money, 311. If you want to be slightly in the money due to the volatility, you can go with the 310. Both are liquid. Both are very affordable, very scalable. And I'll look for my first and probably my only, right? Maybe only. We can go with a moderate. And granted, I might be a step slow to this one because that was a big candle, right? That is a candle of unusual size. But the only thing I could have done is look at the moderate position size buy when gold reaches 34.28, and the conservative position size buy. And notice I put GC there. That's when the gold futures GC reaches 34.27. And, it kind of came and went, but that large candle is worth giving it a moment to sort itself out. And what I usually will do And it's so early in the morning, I don't feel the need to chase anything or overreact. But one of the things that I'll do is I'll switch after a large candle. I'll switch to a 2-minute chart, not for a different setup, not for anything else, but rather so that I can look at what's happening under the hood inside that 5 minute, and I'll look for a minor low. And I really didn't have a clear one. It was kind of chopping around in this area for, as you can see, a good couple of minutes. Um, but again, kind of difficult to say that that was a really clean setup. Not a bad one, and it's a buy or nothing. And frankly, still is a buy or nothing. But now, look at this. We're starting to develop a Darvis, and we've confirmed the trend is no longer valid. That's okay. It's still actually a buy. And it's actually not that different. So I'm going to update this. It's only been 2 minutes. I'm going to update this and say, look, if gold gets down, having lost the trend, I'm okay with 34.27 and a half or dot six. And then the low of this range, 34.26.7. So you notice it's not that different, but it is a different tool because we have a different structure. Okay, it's a different tool because we have a different structure. So now I'm going to plan to scale out when gold reaches 34. What is this? 34.30. There you go. That's the plan. And this is a Darvis setup. So it was initially a wave setup, mean reversion, need a trend, lost the trend. But in the meantime, you notice how something else, one of our automated setups formed, and that is the Darvis. So this is actually a Darvis setup. Pretty cool. And that's how we're going to continue to proceed through the morning. We'll look for more examples of where there's a trend. We'll look for more examples of where we have a level. Let's take a look at Josh. Yeah, crude oil. Yep, let's take a look at that. The biggest hang up I have on gold is, and I am going to mention this in the notes, it's below the pre-PSC. I know for a lot of you, that is a deal breaker. That is absolutely a deal breaker. Now, we did this with TLT yesterday, and it worked out just fine. It's a mild winner there. But crude oil, Josh, I agree. Now, here's the problem with crude. It's not a problem. It's just a consideration. The challenge, if you will, with crude is that USO or UCO tends to not have a lot of open interest. So for those of you that are not crude oil traders in futures, but you want to be a crude oil trader, but you trade stocks and ETFs, you're going to either look at USO or you're going to look at UCO. And when you take a look at the open interest for August 27, it's not bad at the 74 call, but it's 39 cents. And we're not going to do that nonsense, right? So you'll notice as you're taking a look at USO and UCO, there's just not a lot to work with in terms of open interest. And I'm not going to put us in a low open interest setup. If there was liquidity at 23 and UCO, that's fine. But again, there's going to be no non-crude oil futures opportunity here. There's going to be no non-crude oil futures opportunity. And while it is above the previous session close, that's great. But in this room, we can trade futures too. So I'll just mention, it's a futures only trade. Unfortunately, I can't give you all another path in unless, say, XLE, Exxon, Chevron, some of those oil stocks look similar. If you want to do something like this, this would be CL or MCL for my futures traders out there. And you would basically use the Darvis. And you could say, you know what? I could look at 63.40 and I could look at 63.35. This would be the moderate and the conservative. Now, I know not everyone's going to take this, so I'll just put it out there for those of you that do like to trade futures or want to start watching some of the futures setups. And as long as it stays above 63.31, right, I would say we have to use a stop loss of 15% because of the proximity, because it won't take much if we keep moving lower through 63.35 to test or break the previous session close, in which case we want to tighten up that stop. Now, what about crude oil inventories? Well, this is setting up early enough where we're not setting this up 10 minutes or 15 minutes before crude oil inventories, right? We're not setting it up immediately in front of that hot zone. So I don't have a huge issue with this. I don't think it's a problem because of just how early it has set up, but it may not follow through in a huge way because crude oil traders know that inventory numbers are coming up in about 45 minutes, right? So inventories release is 10:30 Eastern. Okay. So those are all things to keep in mind. All right. And that is how we're going to keep going through the rest of this morning. All right.